Good morning. Welcome to the XM.com weekly market update. We're joined again by Pete McGuire, the CEO of XM. Pete, welcome back.
Good morning, Andrew.
Plenty of data once again, so we'll start on the domestic front. The Aussie CPI data came out last week, 6.9, so it came off a tad.
Yes, which is a positive tone.
It certainly is. So we've sort of seen that a little bit in some of these economies now where the inflation hasn't peaked.
Well, it may well have, and we're going to see what the result's going to be at maybe in about 3 or 4 hours with the RBA and their decision. 75% probability of 25 basis points, 25% probability of 0. So let's, I don't know, I'm erring to the side close to 0, but I think they'll roll through 25.
Yeah, you sort of think so. And also considering they don't meet in January.
That's right.
So you'd think 25, let it sit for a couple of months before they come back in Feb. So we'll see how that goes. Once again, the Aussie economy, it's holding up pretty well. Those GDP numbers are good, and the employment is still very strong.
Yeah, big services industry. Still many cafes and businesses that are short of staff. They're finding it hard to fill. And I notice now, I mean, I live at Coogee, so you're hearing a lot of different accents, but the South American accents, the English accents, they're starting to roll into Australia. And they're filling some of those roles, and the conditions as far as coming here for a year, you've got to spend so much farm time and work across the nation, and that's probably where they need people more than ever. Those country outlets that are agricultural based or different service industries.
Yeah, and there's more tourists. You can just sort of see it in the city at the
feel
moment.
It,
and I know sort of around where we work here, some of the backpacker lodges, they're
Starting
back up and running. Yeah, they're up and running. So once again, the unemployment, but the wages data is a really interesting one there, where for a long period of time, from 2014 to 2020, it was either plateauing or drifting down. But we've seen that uptick in the last sort of 18 months, which people have been calling for quite some time now.
Well, they need to. I mean, you can't have inflation run at 7 or 10% or whatever the number truly is, and you're not getting a wage increase because it's just the impact to the wallet and the purse, your spending power.
Yeah, so it's we're seeing that creep up as well. Now, we had a look at last week, a correlation between the Aussie dollar and the S&P 500, which basically tracked one another.
Yep.
Here's another perfect example.
Cracker, isn't it?
Iron ore and the Aussie dollar.
Yeah.
Iron ore price up. People are buying iron ore, which in turn pushes the Aussie dollar higher.
Well, exactly, and that could even be when we think about where China is at the moment, and they're really backing back. You've even got the removal of testing facilities out of Beijing. 16% move to the upside last week for iron ore in the last 6 trading sessions. So it's been strongly bid up, and that could probably impact the Aussie even further. Maybe a 70 handle is where we're heading if that continued move to the upside.
Yeah, which is interesting considering only 4 or 5 weeks ago, we were
62s.
Yeah, it was sort of heading one way at that point.
Yeah.
Another correlation: the pound to the S&P. Once again, it just tracks it nearly day for day, really.
It really does, yeah. And then, as we know, the pound's had an enormous run. We were only, we spoke about that when it hit 103 with Liz Truss, and that was that Monday in September. And you can imagine the pain and the hurt at that trading session. You're now at 122, 123. It's put on 20% movement in 9 weeks?
A couple of months, yeah.
I mean, that's just incredible.
Yeah, it certainly.
People say currencies don't move.
Yeah, that certainly has. There's no doubt about that. So, over in the States, we had the non-farm payrolls late last week. It was slightly a higher number than they were anticipating. But once again, we're sort of getting mixed signals there, where we're getting some weak data, but also once again, it's the employment data that still seems to be holding up pretty well in a lot of these economies. Yeah,
266,000 was the read on Friday, and it was a flat night, but they'd had not a bad rally over the couple of trading days. At the end of last week on Jay Powell's concerns. Got sold off a bit last night. We're well down, 1.5% to nearly 2% down for US equities. I don't know how that'll run across Asia Pac today, but that number moving forward, I'm looking to maybe a 200 or if we can be 200,000 come into January, that's not a bad number. But as you said, I spoke to Bloomberg the other day, and we had one of the anchors I was with has Linda Rahman. Out of 20 years she's done at Bloomberg. I saw it, someone commented, and she was one of the anchors, and it was lovely to talk to her and one of the other guys out of New York, and he said it's a 50-50 toss of the coin whether we're going to see a recession in the States. So that's the jury out, and we'll just have to see how that rolls forward.
Yeah. And I think also if there is one, you wouldn't think it's going to be overly severe. considering
No.
the state of the market at the moment. So, but yeah, it's sort of interesting. And with that number, like the Dow was off about 500 points after that number, and
Yeah.
it pretty much recovered it all
Yeah.
in the same day, which is an incredible turnaround.
Yeah, I mean, the volatility in trading, intraday trading is boom
Yeah,
time.
it's huge. So,
Yeah.
and once again, we had the PMI numbers, which we're looking at the non-farm payrolls as a strong number. This is now in contraction mode.
That's right. Anything under 50 for our viewers out there is contraction. So it's not a place where you want to spend much time. And if it seems to be a continuation really since January 22, you've seen that continual softness from the nearly 60s all the way down to now 48s, 49s. Yeah, we'll have to see where 23 runs, but I think it's going to be a pretty wild year.
Yeah, it's certainly a trend looking at that chart. So,
Yeah.
And finally, just the 10 years, once again, it's crept up overnight, 3.58. It was around that 4.25 mark not that long ago.
No.
So that's, for the 10 year, that's quite a move.
Oh, it's a massive move, and bond traders would be rubbing their hands with glee through the volatility and what they've seen as far as trading. You know, that was just a huge sell-off, and yes, it did rally as far as 10-year. I want to see what happens. We've got Canada. We're going to see, of course, what the Fed does, RBA today, and a number of other central banks leading into Christmas. So I think some more fun ahead for the bond market.
Yeah, and the big one is obviously the US CPI number out next week.
Yep.
Obviously, will they move rates? They probably will.
Yep.
Will it be as aggressive as previous? Maybe not. But once again, if that inflation number comes down a good tick again,
Yep.
The equity boils will be ramping up into Christmas, I suspect.
You bet.
So it'll be interesting.
Roll
to
on
see.
Florida.
Yeah, it was a bit like that. So time will tell, but plenty of data coming out the next couple of weeks prior to Christmas. So we'll keep an eye on that.
Yeah, great week.
All right, thanks for coming in. We'll touch base again next week.
Look forward to it. Thank you, Andrew.
Thanks, Pete. And that's the XM.com weekly market update.